skeptical, a bit reluctant to dive completely into the pool, in part over questions about what regulators will ultimately do, et cetera. I'm curious whether this Coinbase IPO or the moment we're now in has shifted or changed your views at all about where all of this is headed.
Well, I'm still fascinated about it. I'm encouraged by how many people are focusing on it. I'm encouraged about the narrative. It may become a great asset class, and I do believe this could become a great asset class, cryptocurrency. I don't believe it's a substitute for currencies. I think we're going to have cryptocurrencies of dollars, cryptocurrencies of other currencies. But I don't believe we should be focused. We should think about crypto as a substitute of currency. But it could. But I am fascinated by it as an asset class. I am still watching. I will tell you of our investors worldwide, we don't have that much inquiry on it. We are investing in it. Rick Reeder's been on your show talking about things that we are doing in it, and we're studying it. We've made money on it. But I'm not here to tell you that we are seeing broad-based interest by institutions worldwide. And I like to say that most of what we do is a reflection of what we are hearing from our clients. So I would clearly tell you worldwide. Go on, Andrew.
What you're saying, what you're saying, though, I think is very, very important. And I just want to put a fine point on it because
please.
You're speaking to companies all over the world, and you're saying now that you don't believe that companies have a unique interest in this. They're not saying, hey, Larry, we're thinking about how we can get exposure for our balance sheet. Do you have a product? Can you do something? Are you thinking about creating a product for them? And you're speak directly to that, because, by the way, that is the narrative. It's the narrative around, frankly, even the valuations of the Coinbases of the world, in part because there's a view that institutional money is desperate to be part of this. And you're saying the opposite.
Well, I'm not. We are not having those conversations, and maybe they're talking to somebody else. So I don't want to suggest that we have perfect information, but our broad-based client relationships we've had very little interconnectivity on the conversation on crypto, other than a fascination. I could tell you, it is the amount of conversations we're having on climate risk and how they should navigate portfolios is a major component of the conversation. The conversations about our deficits and the conversations we're now having on inflation risk is far more dominant with our clients worldwide than the whole conversation about crypto. Let's be clear about why you are seeing more interest in crypto. CNBC is you are commentating about the markets and about today. We didn't have any conversations around Reddit and GameStop and what does that mean with our clients either. And yet it represented a major component of the markets. And it's fascinating to watch. So I do believe there's components in the financial markets about crypto that is real, that is growing. But if you're asking me specifically about long-term investing, from sovereign wealth funds, from pension funds, from retirement services, from big family offices, the conversation about crypto is a very minor conversation compared to so many other conversations.
Hey, Larry, you're on the Partnership for New York. You're on the executive committee there. And the partnership recently came out against tax increases in New York City because of concerns about what that would mean for the flight of the wealthy people or the flight of companies. Obviously, tax increases are going to happen in New York. What do you think that means? What will New York City look like post-COVID?
Well, I think we're all trying to study how we come back to the office. So I think that the question about taxes really is dependent on how successful we are in bringing back our employees back to office safely. We still have great worries about the issues of safety, and we as institutions, we have to be ensuring our employees that it's safe to come back to office, it's safe to use public transportation. And that question or that answer is going to be really important related to how successful New York City is going to be in the future. Unquestionably, if people feel safe and we open up our cultural institutions and open up our sporting institutions, the vitality of the city comes back and the buzz of the city comes back, we will see people wishing to come back. If people are still frightened of being back in the city, we still don't have that vitality, our tax rates are going up, there's unquestionably, we are going to see more of our employees wishing to go to our new Atlanta office, wishing to go to our Seattle office. Maybe they want to go to our offices, other places in the country. But I'm worried about the vitality of New York. And let's be clear, the financial services industry, by evidence of their financial reportings, we're doing very well. We're doing very well working remotely. Now, I have some big issues about culture and how do we making sure that we're connected, so I can spend a lot of time on cultural issues, but we don't have to be in New York. We don't have to be in San Francisco, our second largest hub. And questions are being raised by our employees, questions are being raised by business leaders. Where should we be headquartered? Where should we have our offices where we could attract the best and the brightest young people? And if New York doesn't become that because of one reason, whether it's taxes or safety, street safety, then we're going to lose that vitality. And then you overlay higher taxes. Before we answer those questions, I just don't believe that's the right path to go. And I truly believe this is going to lead to incremental movement of people and businesses away from the city. We've already witnessed in 2020, New York has been the largest outflow of population of any state. Now, the question is that temporal? Are people going to come back? We'll find out. But this was not what I would recommend a strategy to revitalize New York.
Is BlackRock seriously considering moving its headquarters from New York or from San Francisco?
100% no. What we are doing, we opened up a very large hub in Atlanta. And we have already said Atlanta is going to be our greatest growth area as a organization. And it will be. Atlanta right now is, close to 1,000 people. It could be as large as 3,000 people over time. So we want to have multiple locations. And even now, the remote working, this whole concept of having one hub or one headquarters that has been thrown out. But we're trying to do the same thing in Europe now because of Brexit. We're doing the same thing in Asia. And so we want to be in locations where we can attract the best talent. We want to be in locations where people want to thrive and have families. And what we are learning, it does not need to be in one great city. It could be in 4 or 5 great cities.
Larry, I know it's a busy morning for you. We do appreciate you being so generous with your time this morning. Thanks for being here, and we hope to see you again soon.
Great. Thanks, everyone. Stay safe, please.
You too. Take care.
All right, coming up, Pepsi CFO Hugh Johnston joins us in a First on CNBC interview. All the technology that we were just referring to, have we found a carb snack that doesn't make you fat? What has Pepsi done? They have been making some progress, I think. Squawk Box will be right back.
Our Confident Forever plan is possible with a CFP professional.
A CFP professional can help you build a complete financial plan. Visit letsmakeaplan.org to find your CFP professional.
With education technology growing to $6.1 billion by 2025, there is no better time to build the future with Abi, an AI-enabled tutor named one of Time's best inventions in 2020. Abi makes school fun and learning easy. Visit joinabi.com for more information.
I can get pretty grumpy when my footwear doesn't have proper support.
Come on, batteries. I need a little juice here.
Oh, you call that pressure?
I'll show you pressure.
Luckily, I got Skechers Arch Fit that gives you the support we all need. Try Skechers Arch Fit, certified arch support.
A reservoir filled with toxic wastewater is on the brink of collapse. 40 million people around the world are bought and sold. A group of Catholic nuns determined to end it all. Real estate is starting to get in on the crypto action. Buying a house with Bitcoin? People around the world mourn the death of Prince Philip. The Duke of Edinburgh was 99 years old.
The facts, the truth, the news with Shepard Smith. Weeknight, 7 Eastern, CNBC.
Selling a home is expensive and stressful. So we created our Smart Seller system to sell your home for top dollar and save you thousands in commissions.
I was amazed in the fact that my house sold in one day. Ideal agents saved me in the neighborhood of $20,000 to $25,000 in commission. The process was as easy as it gets. They are the #1 way to sell your house.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
Got a to-do list that just goes on and on and on? Download Thumbtack. It's the app that finds you local pros for any home project, like people to fix the plumbing, or freshen up old paint, or help you deal with all those boxes. Thumbtack instantly finds local pros for you. It shows you prices and reviews so you can hire exactly who you need. Download the app and start your next project today. Thumbtack.
Time now for today's Aflac trivia question. What businessman moved from New York to San Francisco during the gold rush to sell supplies to miners? The answer when CNBC's Squawk Box continues.
The Aflac Post-Pain Show.
Aflac!
What a day of upsets. Jill is certainly upset with that unexpected bill from her back surgery.
Aflac!
Let's see that one more time. Oh! Right in the wallet. Ouch!
Aflac?
Aflac would have paid Jill cash directly to help with expenses health insurance doesn't cover.
Hold on. I think she's trying to give us a side eye. Because she can't turn her head.
Get help with expenses health insurance doesn't cover. Get to know us at Aflac.com.
Keeping your oyster business growing has you swamped. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database. Claim your $75 credit when you post your first job at Indeed.com/promo.
We're Weaver, a national CPA and advisory firm. And we firmly believe that it's important to build rapport before reports. Weaver, accounting for more than numbers.
New Crest Pro Health Complete Protection kills 99% of bacteria. Plus, it works around and around and around the clock. Crest Pro Health Complete Protection gives you 24-hour protection. Crest, the #1 toothpaste brand in America.
We've been at this for a year, but the light is ahead, and it invites us not to go back to where we left off, but to break through. This is our moment to build something new.
Cabinet, handled. Air, conditioned. Lawn, mowed. Get $20 off your first home project at Angie.com today. Make your home an Angie home. Angie, and done.
Millions are saying yes to Allegra, the #1 allergist-recommended non-drowsy brand. Allegra works 2 times faster than Claritin, and unlike Zyrtec, it's non-drowsy. Say yes to the fastest non-drowsy 24-hour relief. Allegra.
Now the answer to today's Aflac trivia question. What businessman moved from New York to San Francisco during the gold rush to sell supplies to miners? The answer, Levi Strauss. In the ensuing years, he made his riveted waist jeans overalls famous.
Welcome back to Squawk Box. Soft drinks and snack giant Pepsi reporting results. The company reporting an adjusted earnings of $1.21 per share, topped estimates, revenue of $14.8 billion, also beating the street. Joining us for more in a first on CNBC interview is Hugh Johnston. He is the vice chairman and chief financial officer of PepsiCo. We should mention that Hugh serves on our CNBC Global CFO Council. It's great to see you this morning. The numbers did come in better than expected. Certain pockets of the business doing better than other parts of the business. And I think probably the biggest question on investors' minds is how do you see the international part of the business and the return to work, return to the office, return to stadium life taking place, and what that really means longer term? Because I think investors are now not just looking at this quarter, but trying to look ahead.
Yeah, thanks for those questions, and good morning, Andrew. Great to be with you guys as well. Yeah, we really did start the year on a very positive note. As you noted, all of the numbers were in excess of expectations. We've continued to grow as we exited last year, and now that we've started to lap some of the pandemic surge, we're sort of powering our way through that as well. And our expectations going forward is that we'll accelerate in the second quarter, and the back half of the year we certainly feel very good about as well. From a U.S. perspective, maybe most encouragingly, we're gaining share in our Frito-Lay business. Our beverage business actually held overall beverage share and gained carbonated soft drink share. And internationally, we're gaining share or holding share in about 80% of our markets, both in snacks and beverages. So we're both growing and competing well. As to the growth outlook, we see sort of a gradual reopening happening in a lot of places around the world. Clearly, the U.S. is doing that. Mobility factor toward the end of the quarter was ticking up significantly. We're moving around the rest of the world, Latin America, Western Europe, and Asia, a little bit more slowly for us, but I think those numbers are going to pick up as well as sort of the vaccines roll out and people get more comfortable operating in the new normal.
What about costs? Some of the costs are going up, and I wonder whether ultimately you're going to start thinking about price increases.
We, as I've talked about before with you all, we actually do a fair amount of forward buying on our commodities. So we are relatively better insulated compared to most of our peer group in that regard. We tend to buy forward at about a 9-month clip. There's clearly a bit of cost pressure in the P&L. But we put pricing in place in anticipation of that. So I think we're well positioned to handle that as we manage our way through the year.
And what about on the drink side? Speak to the mix issue, because I'm a bubbly lover. I live off of bubbly. And I know you now have competition from AHA and obviously all the other people making all sorts of bubbles, and that's become a bigger part of the mix. But how do you see the mix, if you will, shifting? And do you think that the shift in the mix can ultimately actually create some real growth beyond the sort of 2% that you're landing on right about now?
Yeah, I really do. You clearly see just more diversification in consumers' interest, right? I started with PepsiCo over 3 decades ago, and back then it was a pretty simple portfolio of carbonated soft drinks and a little bit of tea, and that was about what we sold. Now you have such a broad array of beverages. But for us, that represents opportunity because we do have the ability to produce an entire portfolio of beverages. We own our own distribution system, so we can take it all the way to the shelf. And one of the things that we have actually done through the pandemic is we've continued to innovate, whether it's things like Bubbly Bounce to give you a little bit of caffeine in the morning as you're coming on the air, or whether it's getting into the energy space with new products like Mountain Dew Rise, which we're doing with LeBron James as our spokesperson on it. So we actually do feel like there's lots of growth opportunity left in the beverage space for many, many, many years to come.
You're one of the biggest advertisers in the country, and there's a lot of media companies and media leaders who are watching right now. How do you see media spend taking place over the third and fourth quarter? Do you see a massive ramp across the board?
I actually don't. A couple of notes on that. One, we never really pulled back all that much last year. We sort of continued to keep our foot on the accelerator through the pandemic. So there's not as much opportunity as maybe others would have to ramp up their spending. And in addition to that, Andrew, in the North American beverage space, we've actually seen some retrenchment in terms of advertising spending. So I don't see those numbers growing in a significant way. If anything, in North American beverages, the numbers may come down a little bit.
And in terms of mix there, because we're also always watching the social media giants and the big tech companies in terms of how you're moving money and what's actually efficacious for you in terms of what's working.
Yeah, I mean, like everyone else, you've seen us move more and more money into digital. Obviously, for smaller brands in particular, it's much more effective because your ability to sort of target is quite good on digital, much more so than it is on linear TV. But that said, with our biggest brands, linear TV still represents the best opportunity to get an ROI on an awful lot of channels, including yours and certainly including big events like the Super Bowl and the like. You can just reach so many people, and with big brands, that reach matters an awful lot.
Okay, so we have to talk. I don't know. I think Joe was referring to this. I don't know if this is what he meant, Joe. We're talking about chips. We need to all be able to eat chips that are not terrible for us. And you now have this High-Low Life. Do you know about High-Low Life, Joe?
I got some stuff. I got a little care package from Pepsi.
Okay.
And there's some stuff in there, Hugh. There's some stuff in there. You're making progress.
Right, you got them. So these are keto chips.
Doritos,
they're 3 grams of carbs. I think it's really technically 5 grams, but you're supposed to take out the fiber. I don't know, the fiber piece of it. So
correct.
How much money are you going to put behind this brand? And if we're having this conversation a couple of years from now, are we all going to be eating these chips all the time instead of? Is this take over the other part of the mix? I also assume the cost of them, given that they're made with almonds, has to be much more expensive.
Yeah, they're obviously going to be higher cost given they're coming from almonds, but consumers are willing to pay a higher price to get these types of chips as well. I think you're going to see just a broader and broader array from products for us. I brought these on especially because Joe's been asking me about this for a long, long time. And with 9 grams of protein, that's a great tasting, Joe, as you've always emphasized, as well as...
Don't worry about the money, Hugh. It just has nothing to do with the money. If we got to pay a little more, right, Sorkin? I mean, I'll save up. I'll cut back somewhere else.
I think consumers are going to be willing to pay for it, but I don't want you to think it's not just something for Joe. We also have something for Andrew. Off-eaten path, cracked salt and pepper, vegetable chip, terrifically healthy. We're going to innovate where it is that consumers want to go. I heard you guys, and we put forth products that we think can actually meet your needs really well. They're terrific tasting and they're healthy.
God, it's great to be able to
I want you to merge the two.
It's great to be able to ask the whole company what to make for us, isn't it, Andrew? It's like, listen, can you get Pepsi to make something?
Since we're here, I want a high-low chip that's a Tostito. So it's a tortilla chip that's not, a flavored Dorito chip or something else. No extra flavor, just the tortilla, but a high-low. Can you work on that?
Let me take that challenge back to the team. I will tell you this high-low product came out of our little innovation hive. We actually developed this product in less than 250 days from idea into the marketplace. So we've gotten better at faster execution of our innovation. I'll take your idea and let us run with it. Let's see if we can get some traction there.
Okay, I will. I'll see you next winter then with those chips on the air. Hugh, thank you. Appreciate it.
Thank you, guys.
Number one, Andrew weighs like 130 pounds, is soaking wet, so I don't even know why we're talking about this. But number two, you're going to load that chip up with guacamole and queso and all of this.
Yes, but that's why I need to reduce.
It's a delivery system.
It's like drinking a Diet Pepsi with a Big Mac.
Exactly. But why does he care? You eat 12 donuts and look the same. Still to come on Squawk Box, a business roundtable coming out with support for rebuilding infrastructure, but not for President Biden's plan on paying for it. We're going to talk to the chair of the BRT's Infrastructure Committee on the group's stance straight ahead. And then later, Coinbase at one point exceeded $100 billion in market cap after its debut on the NASDAQ, taking Bitcoin and Ethereum along for the ride. Is the cryptocurrency firm the future, or should investors beware? Well, sounds like an On the Other Hand segment with John Fort. We're going to break down both sides, as he does in just a bit. Only he can do it. Squawk Box will be right back.
We are a special breed, driven by something altogether different. The belief that one day, every last second of work will have been worth it. Because we all know one thing. Inside every golfer is a better one.
Real Home Realizations by Realtor.com.
Why is it called working from home? It should be called working from junk closet. Right, Skelly Bob?
Now that you've spent so much time at home, maybe it's time to find a new one. Realtor.com.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database. Claim your $75 credit when you post your first job at Indeed.com/home.
Our Confident Forever plan is possible with a CFP professional.
A CFP professional can help you build a complete financial plan. Visit letsmakeaplan.org to find your CFP professional.
On Tech Check, after Coinbase's monster listing, what's the next IPO to watch? Listing mania hits the street. What investors need to know. Tech Check, 11 a.m. Eastern. Watch or listen live on the CNBC app.
Want to know an easy way you can stock up on grocery items you won't find anywhere else while supporting a great cause? It's called Imperfect Foods, the grocery delivery service on a mission to build a better, kinder food system. By offering imperfect groceries and exclusive items that went from unwanted to wished for. With scheduled delivery once a week, filling up your pantry has never been easier or more responsible. Perfect.
Get 20% off your first order with code PERFECT at imperfectfoods.com/TV.
Eating better is easy when everything is done for you. Meet Freshly. Chef-cooked meals ready in minutes. Skip the cooking and cleaning and get meals delivered fresh to your door. To order your chef-cooked meals, go to freshly.com today.
This is my wallet before, and this is my Rich wallet.
It's smaller, lighter, and a lot more convenient than my old leather wallet.
And helps me get rid of all the junk that I've collected over the years.
The Ridge is a huge upgrade. Get your Ridge wallet at Ridge.com.
Welcome back to Squawk Box. I am Dominic Chu here with your Market Minute. We want to show you, first of all, what's happening with newly public Coinbase and the market cap that we've seen kind of develop over the course of the last 24 to 48 hours. Right now, those shares are up 8% in the pre-market, $355 per share. At that level, we're talking a market cap of roughly $93 billion, assuming certain share issuance in the future. So watch that. But at the highs, when we saw that intraday, it was worth close to $112 billion. So again, nearly as much as Goldman Sachs at one point at the highs yesterday. We'll see how this trade in terms of market cap continues on. Some of the proxies we've been watching with regard to companies that have owned Bitcoin and how you can take a view on Bitcoin prices with them are actually showing some signs of life today. Tesla, MicroStrategy, Square, and Riot Blockchain all posting some decent-sized gains in the pre-market. Interesting reversal. Yesterday at the same time, they were actually up in the pre-market, but then fell during the course of the session as Coinbase was coming public. So some traders weighing which is the better proxy for Bitcoin or crypto prices in the future. Those things are playing out as well. And then watch out what's happening here with energy and financials, of course, key in this trade so far with bank earnings coming up. So keep it right here. We've got more Squawk Box coming up. Don't touch that dial.
Everyone wakes up every morning to a world that must keep turning. The world can't stop, so neither can we. Because the things we make help make the world go round. They make it cleaner, healthier, and more connected. It's what we build that keeps things moving forward. So with every turn, we'll keep building a world that works.
Let's get checked for ourselves.
Let's get checked for those around us. Let's get checked for a full range of conditions. Introducing Let's Get Checked. Health testing you do at home. Let's get round-the-clock support from a team of nurses. Let's get fast, accurate results. Know your health. Know yourself. Order now at letsgetchecked.com.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you can live the retirement you want. The right financial professional can show you how. This is what an annuity can do.
Experience matters. For over 145 years, more families trust ADT for timeless protection and 24/7 peace of mind. ADT, real protection.
New Crest Pro Health Complete Protection kills 99% of bacteria. Plus, it works around and around and around the clock. Crest Pro Health Complete Protection gives you 24-hour protection. Crest, the #1 toothpaste brand in America.
When we started Carvana, they told us that selling cars 100% online wouldn't work. But we went to work, building an experience that lets you shop over 17,000 cars from home, creating a coast-to-coast network to deliver your car as soon as tomorrow, recruiting an army of customer advocates to make your experience incredible, and putting you in control of the whole thing with powerful technology. That's why we've become the nation's fastest growing retailer, because our customers love it. See for yourself at Carvana.com.
Looking for a financial advisor you can trust? Ask if they follow a fiduciary standard. That means they must act in your best interest at all times when managing your investments. For more, go to cnbc.com/investinYou.
Following President Biden's American Jobs Plan announcement, the Business Roundtable came out in support of rebuilding infrastructure. But corporate America is not on board with how the president plans to pay for it. Join us now with more on this, Brendan Bechtel. He's chairman and CEO of Bechtel and chairs the Business Roundtable's Infrastructure Committee. Brendan, it's good to see you. You're a fifth-generation Bechtel, and when I hear Bechtel, I immediately think of the things that really are impossible to do. When you look at what you're planning to do, and then you say you're going to do it, I say, no, you can't do that, and there's like cranes on top of a building that's 60 stories high, and there's bridges that are impossible to go across a river, and somehow it gets done, and that's Bechtel. And I understand you want to do infrastructure, which makes sense since you're going to be the one doing it, but how do we pay for it if we don't raise taxes somewhere?
Yeah, well, thanks, Joe, for the kind introduction. It's really great to be with you guys this morning on behalf of the Business Roundtable's Infrastructure Committee. I would say that the bigger thing we should be talking about is what's the cost of not taking action. And the cost of inaction is huge. So we're already paying a price as a country for gaps in our infrastructure. The American Society of Civil Engineers, this year's report card pegged our nation's infrastructure to C+. That costs every U.S. household more than $3,400 a year due to productivity losses, higher transportation costs, and other problems. Over 10 years, that's $4 trillion and 2.5 million jobs that people should be having. So, and the cost of inaction is going to get worse with time, not better. So the World Economic Forum in 2002 ranked the nation's infrastructure 5th in the world from a competitiveness perspective. Last year, we were 13th. So we're going to continue to fall further behind.
Brendan,
and this, of course, this is a rare bipartisan opportunity with popular support, as you guys talked about this morning with the polling. So let's get this done. It's hard, as you said, but we love hard. So let's get it done.
Okay, and we don't have much time. I don't know why, but I just want to ask you, how are we going to do it? The BR2 is not mincing words about what corporate tax increases and how they feel about it. They unequivocally weaken U.S. business expansion, weaken hiring, weaken investments. It'll weaken investments in R&D. The tax system needs to support all these things, but not through corporate tax. I understand that. That's tax somebody else. But who should we tax if we don't tax? What's your plan for paying for it, Brendan?
Yeah, well, Joe, I think this is the hard part. And I would say, look, there's still questions on what should be in the bill. What's the size of what we're all trying to pay for? And then, of course, the best way to pay for it. Yes, there are clear benefits to business from additional infrastructure investing, but we also think it's unfair to ask business to shoulder or cover all of the additional costs of this public infrastructure investment. We really recommend that there needs to be some balance on the scope and how this gets paid for. The most important thing from my perspective personally is we need to learn from some of the other countries around the world where there's a balanced mix of sources of revenue and credit in some cases that fund sustainable infrastructure in a sustained way over the long term. There's lots of options for how to make this work. We could be creative. We got to keep in mind these investments generate long-term growth. I personally would advocate a mix of short-term deficit spending and other sources of revenue that are sustainable over the long term. Unlock private capital. Asset recycling is an example from Australia that's been incredibly successful. User fees like a vehicle miles travel tax as we transition to more EVs. Build America bonds. There's many different solutions. The great news is the president said that compromise is inevitable. Applaud his leadership on the issue and trying to find a bipartisan path. Been engaged in really productive, promising discussions with lawmakers recently and eager to get to work.
All right, Brian, Brendan, we will. I want to talk more with you about all this stuff and just in general about your business because it's fascinating. I'm just glad it's not me building bridges and stuff. That's woo. But amazing stuff. And we'll have you back, talk about, ways that we can come together and maybe get this done, get the right things done. Maybe not everything, but
absolutely.
Thanks for your time.
Let's get it done.
All right. Back.
Thanks, Joe.
Thanks, Joe. Let me second your emotion. I'm glad it's not you building bridges, too. When we come back, shares of Coinbase are poised to pick up right where they left off after that debut yesterday. But should investors beware? We'll talk to John Fort right about that after this break. We'll be right back.
Zero commission trades for online U.S. stocks and ETFs. And a commitment to get you the best price on every trade, which saved investors over $1.5 billion last year. That's Decision Tech, only from Fidelity.
Meet Tonal, the smartest home gym with revolutionary digital weight, so you can be your strongest. Visit Tonal.com.
Every once in a while, the doorbell rings and I get a little surprise. With over 200 wines, that little surprise could be any one of 82 million combinations. I can decide when I get my box and how often. It's super flexible and my satisfaction is guaranteed.
Selling a home is expensive and stressful. So we created our smart seller system to sell your home for top dollar and save you thousands in commissions.
I was amazed in the fact that my house sold in one day. Ideal agents saved me in the neighborhood of $20,000 to $25,000 in commission. The process was as easy as it gets. They are the #1 way to sell your house.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
Welcome back, everybody. Cryptocurrency financial firm Coinbase went public yesterday in a direct listing, ending the day with a market cap of about $85 billion. But is Coinbase the future, or should investors beware? John Ford is here to weigh in. Hey, John.
Hey, Becky. Well, here's a problem. Coinbase makes money when people buy and sell Bitcoin and Ethereum mostly. Right now, people are gobbling up Bitcoin because it can only go up, right? So they don't mind that Coinbase collects about 0.5% of every transaction in fees. And those fees are why in 2020, Coinbase had more than $1 billion in revenue, more than double the year before. But see, what have we learned from Robinhood in 2021? Retail investors don't love fees. So how long before other companies undercut Coinbase's main revenue source? Plus, another problem. The argument goes that cryptocurrencies are going to become more mainstream. Some argue that as they get more popular, though, prices are going to stabilize. Well, if crypto prices stabilize, people might trade less. That's what happens in the stock market. So in a weird way, the mainstreaming of Bitcoin could actually be bad for Coinbase. But bottom line, Coinbase is an exchange, and based on where it's trading right now, it's worth more than NYSE's parent company, 3 times more than NASDAQ? I don't think so. Investor beware.
Of course, there are people who say Coinbase is more than an exchange, John. Angel investor Ron Conway actually says it's the Google of digital transactions.
Well, on the other hand, Ron Conway's a smart guy. I mean, sure, Coinbase looks like just an exchange today. Amazon looked like just an online bookstore. Google looked like just a search engine. Apple looked like just a manufacturer of expensive computers. They're all more than that, and so is Coinbase. With the company's depth of knowledge in blockchain, they might just be the ones to take the technology mainstream for all kinds of authentication and all kinds of retail transactions. Coinbase's future isn't just about trading Bitcoin. The Coinbase stock price is probably doing something similar to what we see with NFT-backed sports collectibles and digital art. Crypto capitalists who got rich off of being smart early on Bitcoin and Ethereum are diversifying into Coinbase stock, pushing it higher. And yeah, it could fall in the short term, but it would be a mistake to think Coinbase is just a crypto exchange. It's more of a bet on a new model of decentralized finance. It might be less a rival to NASDAQ, more a rival to PayPal, guys.
Hey, John, thank you so much. It's great to see you today. And by the way, we'll be watching you today, as every day, at 11 a.m. on CNBC's new program, Tech Check. Looking good, my friend.
Thank you.
Okay. Coming up, we've got a big hour ahead. The beginning of earnings season rolling on. Citigroup expected any minute will bring you those numbers as soon as they cross an instant reaction. And then later, former Speaker of the House, John Boehner, going to join us to talk about his new book, weigh in on the economy, politics, and so much more.
Alexa, play Ooh La La.
The Moxie Shower Head Speaker. Only from Kohler.
This new year, shine a light on the world of money with Greenlight, the debit card for kids. They'll learn to earn, save, and invest. Join more than 2 million parents and kids at greenlightcard.com.
Some companies still have HR stuck between employees and their data, entering data, changing data, more and more sensitive personal data. And it doesn't just drag HR down, it drags the entire business down with inefficiency, errors, and waste. It's ridiculous. So ridiculous. With Paycom, employees enter and manage their own data in a single, easy-to-use software. Visit paycom.com and schedule your demo today.
Do you struggle with occasional nerve aches, weakness, or discomfort in your hands or feet? Introducing Nervive Nerve Relief from the world's #1 selling nerve care company. As we age, natural changes to our nerves occur, which can lead to occasional discomfort. Nervive contains B-complex vitamins that nourish nerves, build nerve insulation, and enhance nerve communication, and alpha-lipoic acid, which relieves occasional nerve aches, weakness, and discomfort. Live your life with less nerve discomfort with Nervive Nerve Relief.
Age before beauty? Why not both?
Visibly diminish wrinkled skin in just 2 days. Crepe Corrector Lotion, only from Gold Bond. Championing your skin.
Stay restless with the icon that does the same. The RX, crafted by Lexus.
Get 0.9% APR financing on the 2021 RX 350.
Experience amazing at your Lexus dealer.
Good morning. Stocks surging on a busy day for earnings. We've got Citigroup numbers straight ahead. And John Boehner, unfiltered, the former House Speaker, joins us on the state of the Republican Party and his adventures in the marijuana business. Plus, Coinbase surging in yesterday's public debut, Bitcoin trading near all-time highs, and the world's largest asset manager just told us this.
I don't believe we should be focused. We should think about crypto as a substitute of currency, but it could. But I am fascinated by it as an asset class.
We'll have a lot more on crypto with the CEO of Grayscale straight ahead as the final hour of Squawk Box begins right now.
Good morning and welcome to Squawk Box here on CNBC. I'm Joe Kernan along with Becky Quick and Andrew Ross Sorkin. U.S. equity futures at this hour are indicated up, and they've been up for most of the morning. The Dow's been pretty solid. Some additional good reports after those 2 record reports out yesterday from a couple of the big important banks. And then the NASDAQ, which seemed like it was held hostage a little bit yesterday by what was happening with the Coinbase debut, because things like Tesla and Square and some of the other high flyers were moving with how the market was treating Coinbase. So we're going to talk more about that in just a second. I know that when we have Michael Sonnenschein on, and I'm looking forward to John Boehner. What do we say? Adventures in the marijuana business.
In marijuana?
Yep.
Yeah, because he says he's never tried marijuana, but he thought it was a good business.
I think he's more of a red wine guy.
He is, but never tried any. Come on, John. Come on. Maybe he didn't inhale. Anyway, we got Citigroup.
We do. Citigroup just out with earnings. Wilfred Frost is here. And Wilf, take it away. What are the numbers?
Yes, so a nice revenue beat, small revenue beat, 19.3 versus 18.8 billion. Big EPS beat. 3.62 versus forecast of 260. Similar themes to the others. Very strong capital markets and a $2 billion benefit on the provisions for credit losses line versus a forecast of a $400 million cost. And that's the reason for the big EPS beat. But the much bigger news, guys, is that they are pulling out of 13 international markets in their global consumer business, not in their institutional business, not in their private bank, global consumer. This includes some big markets, the likes of Australia, China, India, Korea, Russia, to name but a few of those markets. They will now operate out of 4 hubs in that region: Singapore, Hong Kong, UAE, and London. And this is part of Jane Fraser, the new CEO's ongoing review. She's already spoken of wanting to focus resources where they have advantages. And she provided me with this quote this morning that says, as a result of the ongoing refresh of our strategy, we've decided that we are going to double down on wealth. We'll operate our consumer banking franchise in Asia and EMEA solely from 4 wealth centers: Singapore, Hong Kong, UAE, and London. This positions us to capture the strong growth and attractive returns the wealth management business offers us through these important hubs. While the other 13 markets have excellent businesses, we don't have the scale we need to compete. We believe our capital, investment dollars, and other resources are better deployed against high-returning opportunities in wealth management and in our institutional businesses in Asia. Again, worth reiterating, institutional and private bank, they'll still be in all of those markets, but within the global consumer businesses, pulling out of around 13. And this is part of that strategy. New CEO, fresh pair of eyes, try and focus where they really have advantages. Is worth noting, though, even though they're pulling out of some of these markets in wealth, they're still pretty big in wealth in Asia, despite now slimming down where they'll operate out of about the ranks number 3 in wealth management. And then within the institutional business, which is not pulling out in any of these markets, Asia is very important to them, and they stay committed in that area. It'll be very interesting to see how this is articulated on the earnings call, and also to see how people react. A lot of different analysts have wanted to see them focus rather than try and do everything everywhere throughout, and seeing 2% reaction from this news and the earnings as well, guys.
Yeah, Wilf, you said that they're pulling out of some big markets, the biggest, China and India, both in that list. So that is a pretty significant move. I can understand why analysts have wanted them to focus more on the places where they have an advantage, but this is a pretty significant move.
Very significant. And again, you just reiterate the key point. Institutional will still be there. And in fact, relative to their biggest rivals in the investment banking space, that they are very big in Asia. So they're not needing to pull out of any of those particular types of businesses. In global consumer, they don't have as big a footprint, and clearly deciding to focus into 4 hubs. Of course, don't forget that pulling out of those markets in terms of a specific presence doesn't necessarily mean you don't do anything in that space, and they have those hubs, as they're calling it. But no, it's definitely a significant step, and it's going to be great to hear some numbers articulated as well. How much is this going to save them? How long will it take to make this transition? And how much will it cost them, I guess, on the top line, as you say, Becky, because there are some big markets involved there that they'll be stepping out of. It's gaining a little bit more now, 2.4%. And I'd just say that this is one of the key areas people have been looking for. It's interesting, actually. It comes off the back of Goldman and stuff yesterday, who were saying on their earnings call, and various analysts were discussing this afterwards, that we've seen a snapshot in the last month or two that basically European banks can't seem to have that universal banking model. We've learned that recently with the Credit Suisse issues, the Nomura issues. US banks, the really big ones, can have that universal model, but the theme of the last year or so has been focus where you've got your strengths. Don't try and do everything in every market unless you've got the scale to do so. And I think this fits in with this, that theme that we've been learning about, and it also fits in with what people have been wanting to see from Citi and Jane Fraser, fresh pair of eyes, new CEO, acting pretty swiftly, I would argue.
We'll look forward to hearing what they say on the conference call and the more details on that. Up $1.77, that's the highest tick I've seen so far, but we will look forward to hearing from you later after that conference call. Thank you. In other earnings news this morning, Bank of America reporting earnings of 86 cents a share for the first quarter. That came on revenue of $22.8 billion, and both of those numbers beat estimates. Bank of America also announcing a $25 billion stock buyback plan, saying that will be consistent with the Fed restrictions. You can check that out. Bank of America shares up by about 1.4%. And the CEO, Brian Moynihan, is going to be on Squawk on the Street. That's coming up. Wait a second. 3 p.m. Eastern time. I think that must be on Closing Bell, not on Squawk on the Street. 3 p.m. today, Closing Bell, and Wilf will have more on that. In the meantime, BlackRock reported adjusted earnings of $7.77, triple sevens, that topped the consensus of $7.71. Assets under management at the end of the quarter, $9.01 trillion. The CEO, Larry Fink, joined us in the last hour, and here's what he said about his outlook on the markets.
I am incredibly bullish on the markets, and you're right to be worried about our deficits. Our deficits right now are not a big issue, and that's what the markets are saying. And they're not a big issue because the amount of money that's on the sideline, the amount of capital that is trying to be put to work.
Fink also addressed cryptocurrencies, saying that it could become a great asset class. Andrew, he was pretty specific. He said he doesn't think it replaces currencies, but he does think it could be a great asset class.
Thanks, Bex. We're going to continue this very conversation because we want to talk about yesterday's big public debut, the cryptocurrency giant Coinbase, closing at $328. It's down from the high of $429, but well above what was the reference price. Kathy Woods, ARK Invest, bought shares of Coinbase for 3 different funds with a total investment of about $246 million in Coinbase. 2 of those funds sold shares of Tesla to do it, but it remains the top holding in both. Joining us right now to discuss the implications of the Coinbase public debut and what it means for the cryptocurrency world is Michael Sunshine. He is the Grayscale CEO. Good morning to you, Michael. Here's where I want to actually start. I don't know if you had an opportunity to hear the conversation that we had with Larry Fink. He spends a lot of time talking to some of the biggest institutions in the world. And I have to admit, I was surprised by his answer that he was not picking up a lot of interest from the sort of pension fund institutional world sovereigns and the like? Because we anecdotally hear about that all the time, but I do think he normally has his finger on the pulse, and I'm curious what your reaction was to that.
I think that we've certainly seen institutional interest in the crypto ecosystem probably over the last 18 to 24 months, and it's probably as robust as it's ever been. But it's only recently that the cryptocurrency asset class as a whole is probably now reaching an inflection point where it's large enough for sovereigns to begin to participate in it. So on that point, I'd probably agree with him. But outside of that, it's certainly something that's here to stay. And what we've been hearing from investors on the heels of the Coinbase listing is it's really signaling a certain level of maturation in the market that we haven't seen yet.
And so when you think about where we are, we focus so much on Bitcoin, but I don't think there's a question about whether cryptocurrency or blockchain is going to be with us, for the future. I think the question that people are so concerned about is the valuation of Bitcoin and whether this is something that goes to $1 million a Bitcoin, or potentially comes down materially along the way. Which isn't to say that maybe Ethereum or some of the other cryptos really emerge even more than they have already. How do you see that playing itself out over time?
Investors are still diversifying into this asset class. I mean, if you look at the number of digital assets that are now traded with, multi-billion-dollar market caps, it's really encouraging to see how many of these projects are taking on a new life and gaining acceptance in the investment community. I think most investors certainly are going to have, for the foreseeable future, a core position within Bitcoin or within Ethereum. But we've definitely seen that investors are increasingly moving to diversify their crypto exposure. I mean, we now have 14 different products at Grayscale, and there's certain themes within that investors really like. Things like privacy, things like gaming, file storage. They're really beginning to see some of the other use cases of digital assets that have emerged.
But are you thinking of them, and you just used an interesting phrase, digital assets. Are you thinking of these as assets? Are you thinking of them as currencies? I mean, I think that has always been one of the sort of central questions to the future of this. And it goes to some degree, how you might value a Coinbase, for example. Because if you believe ultimately it's an asset, I'm not saying simply an asset, but it's an asset, then that's a trading business. If you believe it becomes a currency, then maybe you start to think about it as a PayPal or more of a fintech company in a different way, and that's a different valuation.
I think it's too early to say, Andrew. I think in the developed world, the near-term use case isn't necessarily going to be for currency. We're certainly seeing the emergence of things like we've talked about before, Bitcoin being thought of as a digital gold or as a store of value. But as time goes on and you start seeing other application layers built in, you're going to see that some of the transactional efforts or the ability to move value around the world or cross-border, et cetera, begin to be unlocked. We're certainly not talking to investors about Bitcoin replacing the dollar or being used in everyday commerce. It's certainly in the near term.
So people are buying your product to get exposure to Bitcoin and some of these cryptocurrencies without buying the currencies unto themselves. That's for regulatory reasons. Where do you think we really stand right now? I mean, Gary Gensler was just appointed to run the SEC. Do you think that we're going to get some clarity during this administration with new regulations around crypto?
I do. I really do. I think that the regulatory community is as engaged as they've ever been before, and certainly having folks like, Chairman Gensler leading the SEC, given his previous engagement with cryptocurrencies, will likely cause him and the rest of the SEC staff to focus on crypto. And, again, kind of coming back to Coinbase and some of the work we're doing at Grayscale, a lot of these companies, us included, are really, really focusing on trying to ensure that we do things right and proactively working with regulators. So I think that there is a healthy tension between regulation being, both a risk to crypto overall, but also one that we're really looking at as an opportunity.
And just so the audience understands, how do you think about what you're doing relative to what Mike Novogratz is doing, for example, in terms of some of the funds that they have? versus buying some of these cryptocurrencies directly and creating effectively your own basket?
Absolutely. Grayscale is the world's largest digital currency asset manager. We have 14 different funds. We now manage over $50 billion. And so we really view our product lineup really as a family of access products, much the same way that investors use access products for expressing a view on assets like gold or oil or, really any thematic investment out there. And investors are using combinations of those products in order to create their own tailor-made basket of cryptocurrencies. And I think that there's a real use case for having that as part of someone's investment portfolio. Certainly investors can buy Bitcoin directly, but for many investors, buying it through a fund structure is, perhaps more attractive because it negates the need for them to, have to buy, hold, safe, keep it directly, the same way people buy gold, but also sometimes buy investment products like GLD. And so we think we've been a pretty meaningful conduit to help get investors access and exposure to the asset class.
We got to run, but I don't know if you can see the screen. Dogecoin is up 13. What do you make of Dogecoin? I mean, I thought Dogecoin was supposed to originally be a joke, a bit of a joke.
Yeah, unfortunately, I can't see your screen, but no real thoughts on Dogecoin. It hasn't been an area of focus for me or the Grayscale team.
Okay, Michael, it's good to see you. Appreciate it.
Good to see you. Thank you.
You bet, Joe.
Thanks, Andrew. Coming up, former House Speaker John Boehner will join us live with a read on politics in the Biden era, his reflection on the Trump era, and his work in the cannabis industry, and a list of his most famous Boehnerisms. I had to practice saying that so I didn't make a really bad mistake. And headlines just out, the Biden administration will punish Russia over the SolarWinds hack, and election meddling will prevent U.S. financial institutions from buying Russian government bonds. You're welcome. That's starting June 14th. More details coming up later this morning. We'll be right back.
At EY Parthenon, we know that companies need a strategy they can execute. A strategy that incorporates growth potential and digital investment, that works across the entire business and delivers long-term value.
Where a company sits on the digital maturity curve is going to be an indicator of how successful they're going to be.
No business should be considered sacred right now.
We're advising our clients on the bold actions they need to take.
Watch episodes of Real World Strategy with EY Parthenon.
When the market is unpredictable, BAM gives you certainty. In the face of market volatility and illiquidity, BAM insured municipal bonds deliver default protection, value preservation, and a durable AA rating from S&P. BAM's insurance protects against everything that causes a default, including natural disasters, financial fraud, pension issues, and economic disruption. So while America rebuilds, BAM has you covered. BAM. Build America Mutual. Talk to your investment advisor or visit buildamerica.com.
So who climbs ladders to clean their gutters?
Dad, I keep telling you it's dangerous.
Climbing ladders is too dangerous. Leaf Filter puts an end to that.
So how does it work?
Leaf Filter's three-piece system filters out leaves and debris, letting water flow through freely.
Do we need to replace our gutters?
Great question. Leaf Filter could be installed right on top of your existing gutters. We're sold. Call 833-LEAF-FILTER or go to getleaffilter.com for your free gutter inspection and estimate.
On Tech Check, after Coinbase's monster listing, what's the next IPO to watch? Listing mania hits the street. What investors need to know. Tech Check, 11 a.m. Eastern. Watch or listen live on the CNBC app.
Selling a home is
moment and first-class benefits like 5G with every plan. Network, support, and value without any trade-offs. That's T-Mobile for Business.
We've been at this for a year, but the light is ahead, and it invites us not to go back to where we left off, but to break through. This is our moment to build something new.
It has been a long year.
Yeah, where it's been anything but normal.
Well, now there's hope. The COVID vaccines.
I know. It's been a little confusing.
Like, really confusing.
So it's more important than ever to make a plan. Visit planyourvaccine.com
to find out where and when to get your vaccine.
What are you waiting for?
Roll up your sleeves
and plan your vaccine.
Plan your vaccine so you'll be ready when it's your turn.
In his new book, former House Speaker John Boehner dishes on his time on Capitol Hill, lessons he learned along the way, also weighs in on the Trump era. Join us now, former Speaker John Boehner. He's author of On the House, a Washington memoir. It's great to see you, Speaker. And we have about 7 minutes to talk about so many things. If we have time at the end, I want to talk to you about Mueller. I went to X. I was a bomber. You used to beat up on us. And were you a starting linebacker? Let's talk about this later. You beat up on those poor Jesuit preppy kids. Something fierce.
Yes, we did. Yes, we did every year.
Yeah, you did. I'm from Price Hill. You were in Reading. You're with 12 kids.
I'm second oldest of 12.
And maybe we can get some Boehnerisms too. That's how it's pronounced, right? Have I got that right? Boehner.
That's correct.
Okay.
Correct.
So, look around. And what we see on both sides of the aisle, there's four parties now. There's the left, there's the far left, there's the right, and there's the alt-right. And you basically take the credit or the blame, as it were, for the split in the Republican Party to some extent. Have I got that right?
Well, I don't take the credit or the blame. I inherited this. You know, the American people send people to Congress. I don't choose who they are. The rest of the Congress doesn't choose who they are. The American people send these people. And after 2010, we've got some, most of the Tea Party members turned out to be good, solid Republicans. But we got some real knuckleheads along the way. And on any given day, I had 210, 215 solid Republican votes. But I always had 2 or 3 dozen knuckleheads that all they ever wanted to do was vote no. It was either going to be all their way or no way. Joe Biden's dealing with this right now. He's a traditional Democrat dealing with the progressive wing of his party. And up over the last couple of months, he's given the left basically everything they demanded at the expense of working with Republicans in a more bipartisan way.
Knucklehead is such a good word. It's such a good word because it's so, you can use it whenever you need it, but it fully sums up what we're talking about. The infrastructure plan we're talking about right now, you described that, and I'm sure that this is because of some influence from the knuckleheads you were just talking about. See, I'm even allowed to use it. Maybe not. Those are your words. But it's mostly a new Green Deal sort of disguised as an infrastructure plan.
Oh, that's correct. I thought I knew what the word infrastructure meant. The rest of the world understands what infrastructure means. But the Biden crew has a new definition for it. It's not gonna happen because the votes aren't there. And the votes aren't there because it's more than infrastructure, a lot more. And then they want to raise taxes. This is not the prescription for actually getting anything done in Washington these days.
Right. Andrew, what do you got? Where you want to take this? There's a million places to go with the speaker.
There are a million. I wanted the speaker, if he could, just to weigh in on what we've been seeing in the business community in terms of these voting bills across the country. You know, a lot of businesses speaking out quite publicly against them. You had Mitch McConnell come out and effectively criticize the business community, which typically has been aligned with the Republican Party. And I'm curious how you see that playing itself out.
Well, listen, these days, corporate America has got pressures on them, just like the pressures politicians have on them to speak out about this and speak out about that. Listen, they've got to answer ultimately to their shareholders, and having served on corporate boards, still serving on some corporate boards, it's the shareholders who are the investors that they have to answer to.
What is the Republican? Is the Republican Party the party of Donald Trump? Is it totally fractured now? It's never Trumpers versus Trumpers. What's it going to look like at the next midterm? And what do you think? Will the Republicans? It's a slim majority now, and they did better than people thought. If you were still there, would you be Speaker again, or will Speaker Pelosi still be Speaker in 2 years?
Well, listen, I think Republicans have a real good shot at winning the majority in 2022. A redistricting's coming. Republicans are probably going to gain 7 to 10 seats as a result of the new district lines. But listen, I'm a Republican. I believe in Republican principles. Fiscal responsibility, a strong national defense. And if Republicans focus on who they are as Republicans and focus in on the principles of being a Republican, guess what? I think it will unite the party much closer than anything we've seen for a while. The Democrats have the same issue between traditional Democrats and this far left-wing part of their party. This is American politics today. It's as divided as anything that I've seen. As a matter of fact, I would describe politics today as chaos, because that's what it is, chaos.
Yep. Your views on cannabis obviously have evolved, and now is it the medical side of cannabis that initially attracted your interest, but not just that? You think it should, I guess, be decriminalized? Is that your view?
Well, listen, I was always against cannabis. I thought it was a gateway drug, but I watched state after state approve the use of cannabis in their states, and somebody in politics, you have to pay attention to what the people are saying. And by the time I left office, I thought to myself, my goodness, I drink red wine, I smoke cigarettes, and somebody wants to have a joint, what the hell do I care? And then I got interested in the medical side of this, kids with having seizures, and how cannabis was helpful to them. Soldiers with PTSD or chronic pain problems where they didn't want to use opioids. And so that's what got me interested in this. And then I've watched now 36, 37 states approve the use of cannabis. It's time for the federal government to get the hell out of the way.
Yeah. All right. Mr. Speaker, I wish you didn't have to write a book to come on here. You make a good contributor on one of these cable networks, I think. You got a lot to say. There is the book. And we don't have time to talk about Jerry Faust. And by the way, St. Xavier did do much better subsequently to when you were there. We beat Mueller many, many times and went to the state finals and everything else. So don't pretend like that's never happened either.
Just remember, one of those Boehnerisms, if you do the right things for the right reasons, the right things will usually happen. So don't worry about it.
All right. Mr. Speaker, thanks for coming on. And really, I would like to have you back and talk more about this as just a commentator on politics today. Thank you. We'll see.
Well, we'll see.
Okay. All right. Doesn't pay a lot. All right. Andrew.
I think that was a non-answer. We got weekly jobless claims and retail sales just hitting the tape. Rick Santelli has the numbers. Rick.
Yes, and they're very good numbers. Let's actually start out with Empire Manufacturing. At 26.3, that's the best level since 26.6. That was October of 2017. On initial jobless claims, expecting the number to challenge 700. Not only would he challenge 700, we challenged 600, 576,000, a new post-COVID low. And that follows a slightly revised 744 that moved up to 769,000. Also a new post-COVID low when it comes to continuing claims. Continuing claims moved to 3,731,000. But there was also a revision to last month. Last month actually now becomes the new low. 3,727,000. So that becomes the post-COVID new low. But these numbers are still pretty good all told. Now, let's go to retail sales. This is an advance, so it's going to change rather dramatically as we move on through. 9.8, almost double the expectations of 5.8. And as you strip out autos, it stays strong at 8.4. You strip out autos and gas sales, it stays strong at 8.2. The control number, 6.9, a very strong number. And now when it comes to Philly Fed, this is another April number like Empire, 50.2, 50.2. Well, that one's easy to handicap because if you look in the rearview mirror, 51.8 was like the third highest number ever. That takes you into the 70s to find higher numbers than that. So 50.2 is super solid. It just isn't necessarily as record-breaking as 51.8. How did all this affect the marketplace? Actually, not very much. You're seeing interest rates tick down a bit. We're at 160 in a 10-year. We haven't closed below 160 since the 11th of March. So this is a super, super important technical area to pay attention to. Andrew, back to you.
Okay, Rick, thank you for that. And a little bit of extra analysis now from Steve Leisman, who joins us with his take on those numbers. Steve.
Yeah, Andrew, I'm very excited by these numbers, and I'll tell you why. I like my world to be orderly. I like it when something is happening over here, it should be reflected in the data over there. And the most exciting thing for me this morning is seeing those jobless claims tick down, as Rick so correctly said, breaking through not just the 7, not just the 6, but breaking through the 500 or breaking through the 600,000 mark range here at 576,000, seeing a huge drop in the total number of people receiving claims out there. I was becoming concerned that this idea out there that maybe keeping benefits up was keeping people from going back to the workforce. There may be an element of that, but the idea that we made this big shift down tells me actually that the prior 2 weeks was a bit of an anomaly. On the retail sales number here, and that the jobs market is improving as evidenced by what we saw in the monthly jobs data. Now, on the retail sales number, it's funny that this 9.8% month to month is actually a little bit lighter than some of the whisper numbers we'd heard. Some of the high frequency data suggested maybe we'd be in double digits. One reason why that may not be true is the stimulus checks, more of them went out in the second half of the month. So that suggests that we could have additional strength in the months ahead. But some of these numbers are absolutely crazy. 15% on motor vehicles. Let's see, 12% on building materials and supplies. Gas station sales up 10.9%. Clothing up 18%. So you see what people do with their checks. Sporting goods and hobbies up 23%. Then you have that non-store retailers thing is 6%. What's interesting about that is perhaps there's a suggestion that more people are actually going out to stores rather than spending all of that extra money online or through delivery. So some good stuff happening in the economy. One thing I do want to mention is inside the Empire State Index, a lot of big increases in the cost components of those. So that's something to watch. We do know manufacturing costs are rising, and we're watching to the extent to which they're passed along. Some of this could be inflation in the retail numbers here. We'll be watching that to see that, but we do see rising component costs, rising costs for manufacturers in the Empire State Index this morning. Becky, that's the rundown.
Hey, Steve, just in terms of those big gains that you're seeing, the huge jump in things like auto sales, retail sales on those levels, I just wonder how much of that is because of increases in volumes and how much of it is because there are no discounts. Anecdotally, you hear that there just aren't discounts for new cars, for used cars, for clothing. They don't have to discount it right now. Furniture, there's so much demand for those things that we haven't seen sales on so many of those items in forever.
Right. So if I could just put a technical sort of umbrella around that question is, what we see here is we see the nominal price here. This is not inflation adjusted. We will get real retail sales. Those are the numbers that will eventually flow into the GDP numbers. But if this is a matter of pricing keeping the volumes up or keeping the amounts up, that will show up in a lack of either decline in the actual nominal amount or an increase, depending upon whether or not they're actually raising prices. I think this is more volume right here, volume without discounts. I think you're right about that there may not be people that are out there discounting. They may not have the supply disruptions things also makes it so that retailers don't have to discount because they just don't have the goods. The inventories would be relatively lean. And by the way, if that's true, Becky, that's another leg for the economy as retailers and manufacturers restock their inventory. So we'll watch this. We know that the motor vehicles, for example, some of them shut down because they couldn't get their chips. The microchips are not available. So that could be in the future. You'd have an inventory balance from rebuilding those inventories.
Steve, thank you. A lot of stuff to keep watching for, but very strong numbers overall.
Yeah.
Folks, this morning we have a special announcement to share. NBC Universal News Group is launching a new franchise called Inspiring America, honoring people who are making an impact during an especially difficult year. Inspiring America will kick off with a special primetime event hosted by Lester Holt, Savannah Guthrie, and Hoda Kotb, and will air on multiple platforms and networks across our news division. This special will reveal the 2021 Inspiration List, featuring the voices and stories of inspiring individuals, including songwriter, actor, and director Lin-Manuel Miranda, Becky Hammond, the first woman to lead an NBA team, and NASCAR driver Bubba Wallace. Other names include Chef Jose Andres and Claire Babineau-Fontenot. She's the CEO of Feeding America. These are just a few of the diverse, extraordinary people who will be featured, along with many others, making a real difference in their communities, culture, and in our country. This series will become an ongoing franchise across our news division, starting with the primetime event that premieres on Saturday, May 1st on NBC and on Telemundo, and then on Sunday, May 2nd on CNBC, NBC News Now, and on MSNBC. Andrew?
Looking forward to that. We've also got a lot more coming up today. Tech investor Ann Winblad's going to join us to talk new tech versus old tech, and yes, the rise of crypto. Squawk returns right after this short break.
At Nuveen, we believe income investing can benefit both investors and communities. For over 120 years, our income-focused strategies have been building roads and bridges, hospitals and schools, and helping small and large businesses to grow. Investing to make an enduring impact on our world.
Will there be an EV for me?
What about me?
One for me? You mean us?
What about me?
And me?
How about us?
Yeah, how about us?
Great question. Wait, can I get one in green?
Got one for me?
Hey, what about me?
What about us?
Is there an EV for me?
EV for me? Us. What about me? Me?
For me?
Oh.
Tonight, a potential vaccine breakthrough. Could the data from COVID vaccines lead to a cure for HIV? And the American comeback. Our series heads to Austin.
The facts, the truth, the news with Shepard Smith, 7 Eastern, CNBC. Got a to-do list that just goes on and on and on? Download Thumbtack. It's the app that finds you local pros for any home project, like people to fix the plumbing, or freshen up old paint, or help you deal with all those boxes. Thumbtack instantly finds local pros for you. It shows you prices and reviews so you can hire exactly who you need. Download the app and start your next project today. Thumbtack.
If you're tired and you know it, skip the gym. If you're anxious and you know it, take a break. If your heart rate variability is 50 and your body temperature's normal.
If your breathing rate is optimal and you know it. Bring it on.
The most accurate guide on sleep, readiness, and activity. Aura.
Know why you feel how you feel.
Coming up, tech investor Ann Winblad will talk of valuations, the battle between legacy tech growth stocks and pandemic growth stocks. First, though, as we head to break, check out some of this morning's biggest pre-market movers in the S&P 500. Stay tuned. You're watching Squawk Box on CNBC.
The future. It's impossible to see. And when it's finally here, it might not be what you'd expect. It might just be better. Introducing Luxury Electric. Introducing Lucid Air.
Did you know that Petco is now a health and wellness company?
Their groomers work wonders for my confidence.
I trust their vets, and I'm known to have trust issues.
They deliver high-quality food the same day.
I was outside digging. What'd I miss?
Just everything regarding our physical, social, and mental health.
Exciting. I'm gonna take a spin around the room.
Great idea.
Petco, the health and wellness company.
We've been at this for a year, but the light is ahead, and it invites us not to go back to where we left off, but to break through. This is our moment to build something new.
On Tech Check, after Coinbase's monster listing, what's the next IPO to watch? Listing mania hits the street. What investors need to know. Tech Check, 11 a.m. Eastern. Watch or listen live on the CNBC app.
The Nasdaq pulled back a bit yesterday as big tech weighed on the rest of the market. But tech earnings are just around the corner. Joining us right now with what she's watching this earnings season is Ann Winblad. She's founding partner at Hummer Winblad Venture Partners. And Ann, it's always good to see you, always good to talk with you. But obviously we've been a little more keyed into the Nasdaq and some of these big tech names lately, just the pullback that we've seen. Do you have worries about any of these names as we head into earnings season?
Not really. I don't actually look at these companies quarter by quarter anyway. I look at the long-term value of these stocks. If we look at NASDAQ, which is heavy with software companies, enterprise software companies, Google, Amazon, Microsoft, companies like Atlassian, other companies that have grown quite large over the years and even over the last year. These companies are experiencing terrific growth. Gartner says this year that software companies spend by large enterprises, which are the customers of most of these companies, will increase by almost 11%. That's a huge amount of growth for these companies to share. So I'm really not concerned about the macro trends around these companies. Everyone is still well in process of expanding their digital strategy. So I think there's a lot of upside to all these stocks.
One stock that you don't own anymore, and I think it came as a little bit of a surprise to me recently, is Facebook. You don't own that stock. There have been lots of questions asked about privacy, and you've brought up some concerns just about being able to target companies, the advertising dollars that come back in. We've spoken with other people recently who like Facebook because they think there'll be a big return to advertising. What would your counter argument be?
Well, I think they're correct that there'll be a big return to advertising as we see industries come to life. We just talked about some of the numbers out there of retail. And for example, in this IT spend number, retail growth is not even baked in there as an industry in that 11% growth for enterprise software companies. So we will see advertising come back to life, but we see more competition there. Look at the percentage gain in advertising that Amazon has. I think we'll see that in their numbers as well, that number will grow substantially. The companies are looking for a very diversified way to reach the customer, and Facebook does not have the total ownership of this market that they once had. We'll see other companies come in as advertising vehicles as well. The analytics for advertising, determining how well these companies perform, are improving every day. I'm on the board of a company in Minneapolis called Optimine that looks at how well these advertising platforms perform. And clearly people are not leaving Facebook in drove, but they'll be able to diversify those dollars. And they'll want to know when they spend dollars on advertising exactly how those dollars reach consumers. And that's where these privacy trends tend to work against Facebook.
Well, that's what I would ask. I mean, the privacy commentary that we've heard from companies like an Alphabet or from Apple, they're pretty clear on those issues about moving towards giving consumers more control, doing less targeting. They seem to be doing okay with that. Why do you think Facebook is in a trickier position?
Well, because this is what Facebook delivers as the value proposition, is targeting. Facebook is very, very early on any strategy related to advertising with commerce. This is really a huge opportunity for advertisers to be directly in the stream of the purchase, which is why Amazon is doing so well. So I do think that without the targeting that they propose, which they say is their core value proposition, that advertising spend dollars will really be tested against other platforms as well. So this is what Facebook says, is targeting is what they can deliver, and very minute targeting.
And one of the stocks you do own is Amazon. And there was a story yesterday in the Wall Street Journal that delved into the idea that Amazon strong arms its partners, or its customers, I should say, into using its businesses across many different businesses, to agreeing to tougher terms than they might have otherwise, because they risk not having access, let's say, to the retail part of Amazon. Are you concerned about that? It's the type of thing that you hear echoed again and again, and when you have Washington kind of digging around and looking for new entrants, does a story like that concern you?
Well, stories of any company strong-arming their customers really should concern anybody. I mean, really, all in all, the customer bats last in all of these companies and the stock market as well. So if there is truth in that, it should start showing up in Amazon's numbers. Again, I think that all of these companies are going to face increasing scrutiny from Washington. Whether new regulations show up that change their business models is a bigger question. But definitely we see a landscape here where these companies are large, they are wealthy, they are powerful in many respects, and an abuse of power is something that I pay attention to.
Great. Anne, always good to see you. Thanks for your time today.
Thank you.
Andrew?
Meantime, Delta Airlines releasing quarterly results. Want to get straight over to Phil LeBeau. He's got the numbers. Phil.
Andrew, in the first quarter, Delta posting a greater than expected loss of $3.55 a share. The estimate, the consensus that was out there was for a loss of $3.17. But let's be clear, that consensus and that estimate has been moving around quite a bit over the last month. So this is not a dramatic miss that people will likely trade the stock lower on. A couple other things, revenue coming in better than expected at $4.1 billion. The guidance for the second quarter is what so many people will be focused on. Keep in mind that they did swing to cash flow positive in March at the end of the first quarter with $4 million a day in daily cash flow, positive cash flow. They expect daily positive cash flow going forward from here. In revenue, we'll still be down 50 to 55%. Jet fuel, that's a question we're going to have for CEO Ed Bastian in a bit. Expected to come in between $1.85 and $1.95. That continues to move higher, not just for Delta, but for all airlines. Don't forget, you do not want to miss this exclusive interview coming up in a few minutes on Squawk on the Street. Ed Bastian, we'll talk to him about the first quarter, what the outlook is. The CDC yesterday saying that perhaps there is a greater risk if you fill all the seats on a plane for transmission of a virus. And, of course, what's happening here in Georgia with the voter law controversy. All of that coming up in just a couple of minutes. Guys, back to you.
Great, Phil. Thank you. Let's get to Jim Cramer. See what he's thinking about. The claims number was good, but there's some extenuating things in there. Jim, weirded to 10 years, not 10 years, very well behaved. And then we had that debut yesterday, which worth more than any exchange. It's just suddenly we all got to do some remedial work. And this is going to be something we're talking about for a long time. I think we better get with it.
Well, look, when Larry Fink says you might have to get with it, then you do have to get with it. But I've got to tell you, what I am astonished by are these bank earnings. I mean, I think that they are at another plane. And if we do get what everyone thinks we're going to get, which is that Jay Powell's going to be forced to give us a rate hike, the leverage of these companies, I got to tell you, none of these companies is expensive. Not one of them. And, you know, J.P. Morgan yesterday, what a buy. I mean, come on. They did an amazing quarter. And I just think that these are the stocks we got to focus on. You can put Coinbase up in there. I don't mind. Kathy Wood says it's okay. Therefore, it's okay. Yeah, Kathy Wood and Larry Fink. Is there anyone else in the world?
That's crazy. Yeah, that's right? Those two you don't hear put together very often. All right, so in terms of the run that they've already had, it's not too much in your view, Jim, for across the board, because if interest rates finally do start moving up a little bit, there's a lot of leverage, I guess.
That's it. So you take what Bank of America earned they earned almost $3 a couple of years ago. They've added so many clients since then, and the rates are down. I just think that the idea, let's say they could do $350. I don't know. I mean, look at the stock. I mean, you've got all these stocks selling at much lower multiples than they should be. These are cyclical companies. Let's stop buying Caterpillar, and let's start buying Bank of America.
Stop buying. Okay. All right.
That's my thinking. Too bullish? Too bullish? I forgot to say that the Jay Powell's going to end everything and you got to sell everything. Because I'm not saying it. I don't think it's right. He wants to put people to work. So do I. So do you.
Yeah. Did you get to watch Boehner? He's a piece of work, isn't he? Did you watch?
I have to go by the book. I mean, look, we always loved him because he was just a rebel.
You see Ted Cruz
he's
stuff?
A rebel.
There's Ted Cruz stuff in there that, you know, this is what people used to say like 5-10 years ago before we weren't allowed to say anything. I mean, I think the whole book might be, you know, I think every page should be canceled, probably, which makes me want to read it. Anyway, thanks.
I think he's a modern-day Tip O'Neill. He's a Tip O'Neill who worked with Reagan. And we had such great economic expansion. And that's who he is. And I love that. I love that, Joe. I mean, I wish I could go out with him tonight. Does he still smoke?
Oh, I would like to tip a few some red wine too. Right, maybe even a little can. No.
The one thing I have one question I want to ask him. We didn't have time, but my one question I want to ask him. Ted Cruz tweeted yesterday that somebody dropped off a signed copy of that book at his office. I just wanted to know if it was Boehner himself who did it.
And he put it in the fireplace.
Oh, would that be great? Those two are not having a beer, right? I mean, that's what you need. We got to go back to the old days where people had beers. IPAs. They have IPAs. No. IPAs, maybe some Turning Leaf. I don't know. Aren't they coming public?
Jim, they're not having a beer
Is
or
Gallo
a bone.
coming public?
Or
Gallo's got
together.
good numbers.
I'm probably not allowed to say
exactly. that. Let's have a SPAC with them. Let's have a couple of SPACs.
Yeah. All right, Cramer. Have fun with Ed. Have fun with Ed Bastian. Delta CEO Ed Bastian will be live on Squawk on the Street with Jim. Stay tuned. We'll be right back.
Ready to shine from the inside out? Try Nature's Bounty Hair, Skin, and Nails Gummies, the #1 brand to support beautiful hair, glowing skin, and healthy nails. And try Advanced, now with 2 times more biotin.
Lately, it's been hard to think about the future, but thinking about the future is human nature. At Edward Jones, our 19,000 financial advisors create personalized investment strategies to help you get back to your future. Edward Jones.
When the future first arrives, we often don't recognize it. Interactive Brokers founder Thomas Petterfy brought the future to the floor of the American Stock Exchange in 1983. The company had fabricated Wall Street's first mobile computer, and it changed finance forever. Today, Interactive Brokers continues to push finance forward by building the latest technology you need to increase your success. Move your account to Interactive Brokers.
Keeping your oyster business growing has you swamped. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database. Claim your $75 credit when you post your first job at Indeed.com/promo.
Introducing Moro's Miracle Mist, the instant mold, mildew, and stain remover that blasts away the mess in seconds, even on the roughest stucco. Go from this to this. Mold and mildew on vinyl siding? Just spray the stain away in seconds. The results are amazing. Miracle Mist removes years of algae and mold from wood or metal fences and decks. Just spray the outdoor grime away. The difference is clear. Miracle Mist works miracles on nasty buildup on outdoor pool and patio furniture. Marine buildup on fiberglass boats comes clean in seconds. Just spray and the algae goes away. Clean an old teak patio table instantly with Miracle Mist. No scrubbing required. Just look at the amazing difference. Also get the Miracle Mist long-term protection that keeps your home mold and mildew free for up to 3 years. Get Miracle Mist and Miracle Mist long-term protectant to get rid of the grime one spray at a time. Visit MiracleMistTV.com to get yours today.
Welcome back to Squawk Box. Want to get straight over to Dom Chu, who's got a look at the biggest morning movers. Dom.
All right, so let's start here. We're back in earnings mode, Andrew, for these morning movers. We're going to start with the bigger bank mover in Citigroup. Those shares up nearly 3% right now, pre-market. 800,000 shares of volume. Citi beat analyst estimates for both profits and revenues, helped along by a reduction of what it sets aside for possibly bad loans in the future, as well as strong investment banking results. It also, by the way, will close retail banking operations in 13 countries across Asia and Europe. Those shares up 2.75%. Then you've got shares of United Health Group, America's biggest health insurer and the most heavily weighted stock in the Dow Jones Industrial Average, up 2% pre-market, 20,000 shares of volume. It also beat profit and revenue estimates. It also raised its full-year forecast. Those shares up about 1.5%. And then we're going to end on shares of PepsiCo, up fractionally on around 40,000 shares of volume, call it right now, pre-market. The beverage and snack food giant also posting better than expected profits and revenues. PepsiCo was helped along by, among other things, stronger growth in North American markets as consumers are drawn to more newer snack food releases and its, Andrew, bubbly sparkling water drinks. Joe, I know that Andrew's a big fan of those drinks.
We like a lot of that stuff. We had a lot to talk to him about, you knucklehead. I'm going to start, did you see, I'm going to start using that. You can use that anytime. Twitter, knucklehead, you're a knuckle. You can't get in trouble. It's such a good word. It's for every occasion, I think, Dom.
It makes me feel as though it's like a comic strip from like maybe 20 or 30 years ago.
I know. I think Archie called people.
Yeah, exactly.
Anyway, thanks, Andrew, Becky. We'll see you soon. 10-year just went below 1.6. Time for Squawk on the Street.
Wow.
Yeah.
Wow.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber. Futures are up on more solid Q1 earnings from Delta, Citi, Pepsi, B of A. Beats across the board on macro, too. Philly Fed, Empire, jobless claims, and retail sales 2 times the estimates. Our roadmap begins with a landmark moment for crypto, though. Shares of Coinbase surging once again ahead of the open.
Plus the reopening trade, how airlines are positioned to capitalize on a post-COVID return to normal. Delta CEO Ed Bastian is going to join us exclusively in just a few minutes. And we'll continue to focus on financials. We've got Bank of America and Citi earnings this morning. Both were ahead of expectations. We'll see how the shares perform, though, given yesterday's somewhat mixed bag. Carl.
Guys, we're going to dig into, obviously, the earnings. But, Jim, let's just unpack this retail sales number. Obviously, well above, even Goldman's above consensus 9 at 9.5. Motor vehicle 15, furniture just 6, clothing up 18.1. Those checks got spent.
Oh, I've got to tell you, Carl, it's almost as if everyone has already been vaccinated. People are going places, people are doing things, people are spending. If this is what it looks like with a quarter of the country vaccinated, what happens when everybody gets vaccinated? We could have retail sales up 15, 16%. I mean, now we have to start comparing everything to 2019. But you know what? We're blowing away at 2019 in some of these numbers. So, Carl, I've got to tell you, it's an amazing moment for the U.S. economy. And Jay Powell is not killing it. Carl, he's not killing it. He's letting it happen.
I know you were mentioning, talking to Joe a moment ago, about why the 10-year is so well behaved in the face of some of these numbers, not just retail sales, but claims below 600 is a new COVID low. Why do you think that is?
Well, I still think if you look at the Commodity Research Bureau, look at the Bloomberg Index, which I really like, we are still not back to 2018 levels on their inflationary index. And I think that means that Jay Powell looks at that. I think he looks at the fact that oil could be transitory. Plastics definitely transitory. Linerboard not. And I like linerboard sensitivity. Cars a problem because of the cost of freight. Freight's a problem everywhere. But we're not back to where we were. David, as long as we're not back to where we were, why take your foot off the gas line?
That's a question that's going to continue to be asked. And there are those who are going to continue, Jim, to speak concernedly about inflation. You know, guys, we're going to talk financials.
The rich people.
Yeah, we're going to talk financials in a bit, Jim, and go over the stock prices. But I'm just looking through Bank of America's slide presentation that's come along with their earnings release this morning. I mean, you can see it. I know you probably already looked through it, too. The economic recovery has gained speed. They have a slide. They have a slide on payment spend, year-over-year change in terms of credit spending, debit spending, total payments year-to-date, total payments monthly, credit card days past due trend. I mean, all of it looking positive, both spending and delinquencies and all the things you'd expect to see. You would expect, I guess, that's only going to continue.
Oh, yeah. I mean, you're talking about 1 million people opening an account, another million. They're still hiring 20,000 people. But, David, if you do get a rate increase, okay, if you get a rate increase, at no additional cost, what can these guys earn? I mean, look, they earned, without all these new people, not that long ago, they earned almost $3, right? Yeah. Now they have all these new people. And why can't they earn, I don't know, $330, $340? The street, David, is looking for $260 for next year.
Right.
For the end of this year. $290 for 2022, $260 for this year. Well, that's just nuts, David. It can't happen. I know that Joe was saying how liberal you can use the word knucklehead. It's a knucklehead who keeps their earnings estimates down here. I don't know, $330, $340 for 2022. David, these stocks turned out to be radically inexpensive. And when they're radically inexpensive, you can see why the stocks have to go up even more. J.P. Morgan punished yesterday because of how good it was. Yeah. Wells, how much? Because it's so bad, it was loved.
It was right.
So, David, I think these stocks, they are justified in their moves. I mean it. They're going to move more.
We should point out this. There did include Bank of America's earnings, a $2.7 billion net reserve release. Of course, saying what we all know, an improved macroeconomic outlook and lower loan balances. Yesterday, you also had that with J.P. Morgan. But to your point, I mean, the key, though, will continue to be, are we going to start to see significant increase in loan demand? You know, we can talk both for the consumer, but even more importantly, from corporate America. I don't know the answer to that at this point, Jim.
I still think it's got to happen. I think that people are caught. We'll talk to Delta. I think a lot of people, a lot of companies were caught like the autos. I mean, the auto companies simply didn't believe that the numbers would be that good, so they didn't order enough chips. They weren't ready with the demand. I think that these checks from the government, David, they worked. And they've made it so people are more confident. I think the whole program worked. Now, of course, if you think that it's going to be wildly inflationary, then no. But these banks were the principal beneficiaries, David, of the money that went to individuals. And we just have to accept the fact that what people did was they spent half and they put the other half in Bank of America. That's what happened.
Yeah.
And that's a pretty good scenario for a bank.
Yeah. But before we get moving here as well, Jim, just give me your take on Citi, which we see right there, looks up in the pre-market. Net income $7.9 billion. That was $3.62 a share. Revenue was $19.3 billion. They did return $2.7 billion of capital to common shareholders, repurchasing as many as 23 million shares. And the book is $88 on Citi. What is your take on the quarter? Jane Fraser, of course, having only recently taken over as the company's CEO.
Well, you're going to get, you'll be able to get a boost in dividend. The buyback is obviously additive. But what I thought was really special was that Citi's kind of like what Ford was like when Ford decided to be a car company in every part of the world, and so therefore just committed to losing money everywhere. Ford was interesting. They were like sticking by the "we will lose money no matter what" thesis, which I always thought was a bad way to run a business, David. Citi's getting out of places.
Yes.
They're getting out of 13 markets. Citi was deeply committed to losing money everywhere.
Australia, Bahrain, China,
That's
India,
changed.
Indonesia, Korea, Malaysia, the Philippines, Poland, Russia, Taiwan, Thailand, and Vietnam. They're getting out, right?
Only the moon was missing. I mean, if you want to lose money in places, I don't know, Alpha Centauri, they weren't missing there. We got to go to Carl, David, but the idea of Citi deciding to make money everywhere and not putting money in the Big Dipper, it's a very radical positive. Carl, back to you.
Guys, don't go anywhere. We were looking at Delta's earnings, and Phil LeBeau on that point joins us with a very special guest. Morning, Phil.
Good morning, Carl. Quickly, let me give you the Q1 numbers from Delta. A greater than expected loss of $3.55 a share, but keep in mind that the estimate was moving around quite a bit. It was at $3.17 a share for a loss in the first quarter. Revenue coming in better than expected at $4.1 billion, but perhaps the most important metric, they swung to positive cash flow in March. $4 million a day is what they were bringing in. Let's bring in Ed Bastian, the CEO of Delta. You expect daily positive cash flow from here. It raises the question, and you heard Jim talking about it, if this is what the country looks like with only a quarter of the people vaccinated, what can we expect Q2 and the rest of this year?
Well, first of all, great to see you in person,
And it's good to be
Phil
here.
and Bob. It's great to do this live, and I think this is an indication of what's to come as we start to get our business and our world back to some level of normalcy. When I look at the first quarter, what's been clear to us is that our business has made a turn, and that turn is active and it's rebounding in accordance with how the vaccination rates are growing. People don't necessarily appreciate 50% of the U.S. adult population have had at least one shot of the vaccine, and 75% of our customers tell us they expect to be fully vaccinated by Memorial Day. So we've seen a huge surge in bookings just over the last couple of months. In March, we had twice the amount of bookings that we had just in January, just 2 months earlier, and that's what led to the elimination of cash burn, the generation of real net cash flow positive $4 million a day, and confidence as we look forward to. The thing, though, of all that, Phil, that I'm most amazed by is that we're doing this while we're still missing 50% of our revenue base. International is still largely closed. Business travel continues to be quite muted, and we're still not selling the middle seat until next month. So our team's doing a great job. It's the resilience of the business and the franchise that's coming through here and the strength of our people and the brand.
Lord only knows when international is going to come back. So let's talk first off with business travel. What's your outlook in terms of what you are hearing back from corporations in terms of how much more they expect to send their people out on the road, either this summer or let's go into the fall and into later this year?
Well, business travel right now is about 20% of what we would expect normally for this time of year. And what the corporates are telling us is that they're waiting for their employees to get vaccinated in order to open up their offices. So with those vaccination rates continuing to climb, I'm expecting that we're going to start seeing offices reopen this summer. I think by fall, we're going to see a pretty significant bump in business travel starting back. People need to get back to their customers. They need to get back to their own people, get out to the marketplace, continue to drive their businesses forward. I know here at Delta, we're planning on reopening our campus officially in the month of June, and I'm hearing more and more people thinking about moving those dates up as the vaccination rates continue to decline.
Jim, you've got a question for Ed?
Yeah, Ed, first of all, I just love seeing you with Phil. I did something last week that was shocking. I took a Delta flight to Mexico City, and I heard someone say, it's an extremely full flight. I thought I could have the plane to myself. The Mexico City. I need to know, Ed, is it possible that we will have a roaring 20s boom if a plane already to Mexico City is extremely full? Isn't it possible that when business travelers come back that we're short planes, we're short gates, that something's happening right now, Ed, which indicates to me this could be the biggest boom in American history?
I agree with you, Jim. Already, our domestic business, this is going to be led by the consumer, clearly. Our domestic business, consumer business, is back to about 85 to 90% of what it was pre-COVID levels. And that's still with a tremendous amount of concern in the marketplace until vaccinations get us to herd immunity. So I could not agree with you more. I think the pent-up demand is unbelievable, and we're getting everything we can do to get ready to be able to serve that demand come this summer.
And I spoke to the CEOs of all these banks. They expect, because other banks are going for customers, they have to go. They're talking about gigantic travel budgets in Q4. Are you seeing that for the businesses?
We are. We are. People know that they need to get back out on the road, and they need to be out in front of people. I'm taking a tremendous amount of visitors into our business. I was with a head of one of the large financial institutions that came down with their team to see me yesterday. And the more people see others are doing it, the more compelling it will be for others to force them, not just to get back out into the road, but also get our businesses back open again. We need to get this economy moving. Already it's doing well, but it requires the businesses now to start leaning in.
Ed, it's David Faber. A quick diversion here from me to that voting law in Georgia. Delta, of course, has been front and center in what has been a pretty heated debate. You know, on the 26th of March, you put a statement out regarding the passage of the bill that was, you know, fairly even in its approach. You praised some parts of it. You also said you understand why there might be people who are somewhat frustrated and there's more work to do. 5 days later, though, you came out with a statement that was much stronger, saying, I need to make it crystal clear the final bill is unacceptable and does not match Delta's values. Why the change in those 5 days, and do you regret having come out with that much stronger statement against the bill?
I don't regret it, David. And what happened over the course of that 5 days, we were finally able to get our hands on the bill. This process was done very quickly without a lot of transparency. And none of us knew. It's a 100-page bill. None of us really appreciated and understood all the elements that were in there. We knew there were concerns, but when we saw not only what those concerns were, but we heard from our African-American community here in the state of Georgia. Remember, we're the largest private employer in the state, and we've got a very large employee base who's black. Hearing their frustrations expressed, we felt compelled to have to express those concerns.
Let me play off of David's question with a follow-up. You know, Ken Chenault, Ken Frazier, they have drafted essentially a pledge that was put out to corporate America over the last couple of days. Our own Andrew Ross Sorkin wrote about this in the New York Times, and a number of companies and CEOs signed that pledge, essentially saying, look, we are going to be fighting this push for more restrictive voter laws. Yet Delta and you did not sign that pledge. Why not?
Well, I thought our statement spoke for itself. In fact, I think our statement was candidly probably a bit stronger than what that statement was. And I spoke to Ken over the weekend and expressed the fact that we've already made our statement, and I endorse what he's doing. I agree in terms of the tone and the context of what that statement was, but we didn't feel the need to go out yet again with that same theme.
One last question for us before, I know we've got a busy day. We're going to send it back to the studio. Yesterday, the CDC is out with a study essentially saying that, look, we have looked at the impact of either blocking a middle seat on an airplane or filling it with somebody. If there's a little greater distance between passengers, there is less of a likelihood of the spread of a virus. This study comes out at a time when you guys are preparing to start selling that middle seat. Does it give you pause? Do you have to sit there and say, is this the right move right now?
Not at all. That study was based on 2017 data, so it doesn't take into account any of the safety protocols that we've implemented, including masking, the electrostatic spraying, the cleanliness of the surfaces, the distancing that we were doing throughout. And as you know, we were the last airline to keep that middle seat open because we thought it was important. Our experts tell us with the vaccination rates where they're at and demand being as strong it is, it's absolutely safe to sit in that middle seat.
Ed, thank you very much. It's good to be back down here. Actually, guys, where we are is the Delta Museum. It's a vaccination site. There are chairs. You can't see it right now, but there are chairs all around here. You're doing, what, about 5,000 a day?
We're doing collectively on the campus in the airport 5,000 vaccinations a day in our site.
Wow, 5,000. Well, it's good to be down here and to talk to you in person. Carl, I will send it back to you.
All right, Phil, it's great to see you back on the road. Our Phil LeBeau in Atlanta. Let's get industrial production. Rick Santelli.
Yes, Carl. Industrial production for the month of March is hitting the wires, up 1.4%. Definitely a disappointment. We were expecting a number closer to 2.5%. And in the rearview mirror, we actually increased last month's negative number from -2.2 to -2.6. On utilization rates, also a disappointment, 74.4. We're expecting the number closer to 75.7. And this follows a downward revision to last month as well, 73.8 to 73.4. So manufacturing for the month of March, definitely disappointing a bit, but it is the only number today that seems to be aiming in the disappointing direction. Whether it was retail sales or initial and continuing claims, they were much stronger than expected. Carl, Jim, David, back to you.
All right, Rick, we'll see you for more data at the top of the hour. Take a break here. Futures look pretty good. We'll dive into more of the earnings today. Got some good research calls as well, including more initiations of Coinbase, some price target increases for Goldman, a downgrade of Intel. Back after a break.
The way we access information and communicate has evolved. This evolution has resulted in the integration of telecommunication, media, and internet companies. The Communication Services Sector SPDR ETF offers access to the entire communication services sector while reducing single stock risk. The Communication Services Sector SPDR, the next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully.
What can help you take advantage of today's low mortgage rates and save money? Rocket can. You could save hundreds of dollars every month by refinancing with Rocket Mortgage at today's near historic low rates. If your current rate is over 4.5%, with today's low rates, you could lower your payment by over $160 a month, saving thousands in interest every year. It's easy to get your refinance started. Just visit rocketmortgage.com or call us today.
On Tech Check, after Coinbase's monster listing, what's the next IPO to watch? Listing mania hits the street. What investors need to know. Tech Check, 11 a.m. Eastern. Watch or listen live on the CNBC app.
Tonight, a potential vaccine breakthrough. Could the data from COVID vaccines lead to a cure for HIV? And the American comeback. Our series heads to Austin.
The facts, the truth, the news with Shepard Smith. 7 Eastern, CNBC.
The future of fitness isn't dumbbells. It's revolutionary digital weight that learns as you get stronger. So you can be your strongest. Tonal, now at 40 Nordstrom locations nationwide.
I think we can all collectively agree that 2020 sucked. Hi, I'm Yaya, founder of Truebill. Let's make 2021 better, starting with your finances. Truebill shows you a clear picture of your accounts, cancels unwanted subscriptions, and lowers bills by up to 20%. Download Truebill today.
Just always thought dog food is dog food. Didn't really piece together that dogs eat food. As soon as we brought the farmer's dog in, her skin was better, she was more active. If I can invest in her health and be proactive, I think it's worth it.
Visit betterforthem.com.
Bit of a roller coaster debut for Coinbase yesterday. Opens around 380, currently about 344 pre-market. Co-founder Fred Urson was on Closing Bell last night and talked about the criticism that crypto is simply too volatile to be investable.
As somebody who's been working in crypto for 10 years, I've heard that statement hundreds, if not thousands of times. I think the reality is that if crypto is to achieve the huge mission that I think it can, which is being a new global digital money financial system and internet app platform, there is bound to be a lot of volatility along the way.
Jim, we talked about the Moffett note earlier in the week where they see a 600 target. Today it's BTIG initiating with a buy and a target of 500, talking about first mover advantage and an on-ramp for mainstream crypto investors.
Yeah, well, I mean, I told people that they should buy it at the opening and then wait to see if it came down. It did, but I still think that, yes, the $600 price target that Lisa Ellis from MoffettNathanson has, I think it's right. This is all a scarcity, Carl. We don't have any other way for a mutual fund to be involved with crypto. And this way you get all the crypto, and you also get, I mean, here's one for you, honest management. I mean, I find that to be a pleasure, Carl.
Were you at all dismayed, or did you find curious Larry Fink's comment this morning on Squawk that, at least at this stage, the conversations that BlackRock's having with clients about crypto is, in Larry's words, a very minor conversation?
Well, yeah, I mean, I did a piece this morning just saying, listen, this is it really a sideshow versus, say, what Bank of America and Citi and J.P. Morgan are doing, what Wells is doing. And I did something, David, I decided to become an apostate.
Okay.
After you and I had that discussion of no one ever selling Bitcoin,
yes,
I went out and sold. I bought a lot of Bitcoin at 12 because I thought it was a currency, right? At 12,000. And I did something, I know people are going to be angry at me, but I paid off a mortgage yesterday with it. I don't know. Is that dangerous, David? I actually sold some. Now, it's from the chart, David, I may be the only natural seller, but it was so great to pay off a mortgage. It was like, you know, kind of phony money paying for real money. What do you think?
Wait, let me back up. You bought Bitcoin at roughly 12,000, and then you sold it yesterday at, let's call it 63, 64.
No, I sold half.
Half?
I sold half.
Okay.
Okay. Well, I've sold half all the way up. But it was good. And then I took that money, which was the money I got from Bitcoin, and David, I paid off a mortgage, which was real
mortgage
money
in real dollars.
I got from a bank.
Got it.
Yeah, so I now own a house, lock, stock, and barrel, because I bought this currency.
Well, you did very well
David,
on your ownership of Bitcoin.
Won.
Yeah. Carl, also, as we know,
Carl, but
Kathy Wood, a big fan of Coinbase as well. 250 million or so in purchases yesterday from the ARK funds.
Yeah, 750,000 shares as she trims some Tesla. We'll get into that after a break as we get the opening bell in 7 minutes. Don't go away.
This CNBC program is sponsored by Baird. Visit BairdDifference.com.
Wealth is your first big investment. Worth is a partner to help share the load. Wealth is saving a little extra. Worth is knowing it's never too late to start, or too early. Wealth helps you retire. Worth is knowing why. Principal, for all it's worth.
If you wake up thinking about the markets and want to make the right moves fast, get Decision Tech from Fidelity. You'll get proactive alerts for market events before they happen, and insights on every buy and sell decision. With zero commission online U.S. stock and ETF trades. For smarter trading decisions, get Decision Tech from Fidelity.
We may be in a touchless world, but we can still touch people's lives by staying in touch and showing you care. Because now, each time you order online or tap in store with your MasterCard at restaurants and grocery stores, MasterCard will donate to Stand Up to Cancer, one precious cent at a time, up to $5 million. Together, we can start something priceless.
Hey, it's good to see you.
The company we've trusted to keep us working remotely is the same company we'll trust to bring us back together. Cisco, the bridge to possible.
Cabinet? Handled. Air? Conditioned. Lawn? Mowed. Get $20 off your first home project at Angie.com today. Make your home an Angie home. Angie. And done.
The path forward, the changing workplace.
How many people are not going to feel as though they have to be back all the time?
The reopening economy.
We're at 6% unemployment already. That's amazing from where we were.
Stay connected, stay informed. CNBC.
Pretty much what the bulls would ask for on a good day. Futures are green, Blowout macro led by retail sales and jobless claims, good Q1 earnings, and a 10-year yield at 1.6, which is almost a 1 month low or so. We'll get the opening bell in just a couple of minutes.
There is a tenacity that I have. Nothing's going to stop me.
Ooh. Did you see that?
Wow.
That's cool.
We got a deal!
Welcome to Shark Tank.
Shark Tank, tonight starting at 8 Eastern. CNBC, get yours.
And welcome back to Guess the Price. Okay, Johnny, tell our contestants about Eargo.
These top-of-the-line hearing aids from Eargo are straight out of the future. They're rechargeable and virtually invisible in your ears. And you don't need to visit a doctor to get them. They ship right to your door and come with lifetime remote support.
Convenient, right? Guess the price, and they're yours.
$8,000.
Too high.
$6,000. No.
$5,000.
Too high. $3,500.
Oh, too high. Eargos are affordable and retail for about half the cost of traditional hearing aids. Unfortunately, nobody won. Johnny, tell our contestants about their lovely parting gift.
It's a Peruvian pan flute.
Well, that's all the time we have for now. We will see you next time. Bye-bye. I heard that.
We're here and ready to help you with your hearing loss with free remote hearing checks and consultations by our licensed hearing professionals. Give yourself the gift of good hearing again. And if you're an active or retired federal employee, you can now get Eargo at no cost to you. Act now.
Did you know that Petco is now a health and wellness company?
Their groomers work wonders for my confidence.
I trust their vets, and I'm known to have trust issues.
They deliver high-quality food the same day.
I was outside digging. What'd I miss?
Just everything regarding our physical, social, and mental health.
Exciting. I'm gonna take a spin around the room.
Great idea.
Petco, the health and wellness company.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are going to change it.
At Nuveen, we believe income investing can benefit both investors and communities. For over 120 years, our income-focused strategies have been building roads and bridges, hospitals and schools, and helping small and large businesses to grow. Investing to make an enduring impact on our world.
The opening bell is brought to you by Nuveen, a leader in income, alternatives, and responsible investing.
All right, we're going to squeeze in a mad dash, get you to the opening bell a minute from now. You can't help yourself. Intel, AMD, it's just, you just keep wanting to come back to that, don't you?
Well, see, because a lot of people are interested in those stocks, David. That's why I gravitate toward that. I can talk about Coinbase. I can talk about Ethereum if you'd like me to. And I'm coming up with some new